If we look at the June read on the trade balance, which of course is a trade deficit, it's at minus 75.7 billion, which usurps March, which was minus 75 billion, as the all-time biggest trade deficit since record keeping in the early 90s. And I don't have all the inner data points, but it seems to be led, and it has been in the past, by record numbers of imports, of course, which is something to pay close attention to. Now, on jobless claims, also a big week. On initial claims, 385,000, very close to expectations, and not far from the twin billing of 368,000 from the second week in July and the last week in June, which are the initial claim post-COVID lows. However, on continuing claims, drum roll please, we finally break the 3 million mark. And this is a big deal. 2,930,000 on continuing claims, always a week in arrears. And this is something important to pay attention to, especially after yesterday's dismal ADP and tomorrow's more hopeful jobs report that includes government hiring. Right now, interest rates are virtually unchanged at 118 on 10s. And yesterday, we had a double bottom at 112 on an intraday basis, and that is something to pay attention to. Becky, back to you.
Yeah, Rick, I was going to ask you that. In terms of traders, they watch ADP, they watch this weekly number, they watch the monthly number. Of the two that we've just gotten over the last couple of days, which is more important?
Well, in my opinion, the most important thing is the service sector ISM that we had yesterday, the biggest swath of the economy. I do think today's continuing claims is very important. And even on the trade balance, you know, record imports gives us much information. It means that our domestic demand is strong. And I know the Delta variant is taking a bit out of the horsepower, at least psychologically, of many that are measuring the market, analysts and economists. But, of course, outside of that uncertainty, and even maybe including that uncertainty, I continue to think that the reopening is going to gain speed, and I'm not so sure that tomorrow's jobs data is going to correlate with yesterday's weak ADP.
Rick, thank you. We'll see you tomorrow. In the meantime, Steve Leisman joins us with more on that front. Steve, what do you think of the numbers?
I like the discussion on the trade deficit. What you want to see is you do want to see strong imports. I'll get to the export side in just a second, because what needs to happen, Becky, especially relative to the inflation issue we have right now, is you need to see the shelves restocked. We need to have not just the stuff on the shelves to sell, but you need stuff in inventory. And so you have to rebuild inventories, which have been running historically low. And that's what enables you to bring down the price and not charge as much, not just because there's something on the shelf to sell, but because there's something in the back room that you need to move as well. So you get back to a normal level of inventories, then you can have a normal level of prices, or at least price increases. On the unemployment side or the employment side, it's a good number. It's not the low. We've kind of been bouncing around, I want to call it this 370 to 400 range. We should be in the 250s or the 300s at the most, because that would be a more normal job market. So we're still running higher. I'm looking at some of the individual components. There's still 12.97 million Americans getting some form of unemployment insurance. So, and that's with the various pandemic programs. The biggest one seems to still be supplementals, as well as the benefits that are provided for gig workers and other people who are not, or who are self-employed. So we have work to do here. Good to see it coming down. As for the jobs number tomorrow, a lot of contradictory data headed towards the weak side, Becky.